Hi everyone, looking at Bitcoin here on TradingView. Had a pretty solid week starting from April 23rd. I think we were up almost 35% at one point, a little over 35%, and we're just starting to pull back now. I usually don't focus on the smaller time frames for Bitcoin. I think you start to lose track of the bigger picture when you get caught up in the minutia of price action. A lot of people rely too heavily on technical analysis to predict where things are headed in the future, and they don't really base their investments on much else other than a combination of support and resistance, moving averages, MACD divergences, and all that sort of stuff. In my opinion, having a fundamental bias is much more substantial than just a technical bias. And the fundamental bias that Bitcoin will moon because cash is dying or the world economy is going to collapse is just a little too out there for me. I believe it's going to go much higher simply due to inflation. Inflation is a quantitative measure of the rate at which the average price level of a basket of selected goods and services in an economy increases over some period of time. Put simply, prices of goods increases while the value of the dollars in your pocket decreases. Typically when we see inflation, we also see a huge increase in the supply of dollars. And when there are more dollars out there floating in the economy, each one becomes worth less. During times of high inflation, people usually flock to gold. Gold is a scarce reserve asset that has a much more restrictive supply. Therefore, it will better retain its value. Now, how does Bitcoin relate to all this? Well, it has a lot of the same qualities as gold, one of those being the finite supply or the scarcity. Bitcoin only has about 18 million in circulation, and the mining rewards are very slow. So the rate at which new Bitcoin are being mined is very slow, and it's about to be halved again later this month. So in theory, Bitcoin should behave similarly to gold in an inflationary environment. And currently we are in a deflationary environment. The inflation rate rose all throughout the last half of 2019 and took a massive drop off with the economic shutdown that just occurred. Now, in an attempt to prevent hyperdeflation, where inflation just gets to absolutely insane minimal levels, the Federal Reserve stepped in to boost spending via the stimulus that's being pumped into the market right now. And all this stimulus has increased the overall supply of dollars. And when we eventually see the economy reopen and we see oil demand pick up, that's when even more inflation is going to be pumped into the market. If you guys want a good indicator of where inflation may be headed, you should probably track the price of oil. So we're going into deflation as prices go down, and we go into inflation as prices go up. And it's simply due to the fact that as we sell oil to other countries, we sell them in US dollars. So we're getting US dollars brought back into the United States. And when you have all these dollars floating around, the value of them is going to decrease. And that's when we should eventually start to see prices for Bitcoin substantially rise. So I like to overlay my fundamental bias on top of each chart, and I usually use Elliott wave to determine where prices should end up, or relative area of where they should end up. It's not exact. So for Elliott wave, we have a impulsive wave right here, a correction, and then another impulsive wave, correction, and then should be followed by one last impulsive wave. So slide over here to my trend-based fib extension. Start at the bottom of the wave, top of the impulsive wave, bottom of the corrective wave. And that gives us the first impulsive wave target at around 21,000. And then at that level, we see a slight correction, and it usually comes down to the 236 Fibonacci level. Let me just clean that up a little bit. And then from this point, we usually get one last wave higher. And in this last wave higher, it's usually about the same length as the first wave. So this first wave was about 335%. Take this right here, and then 335% from here. 335% brings us around $75,000, $70,000 to $75,000 price target at the end. And it's at this point that I would start to consider taking off a significant portion of Bitcoin. This is just me personally. Some people may decide to hold on for whatever comes after this, but this is a target that I've had for a little while now. And so yeah, I have a fundamental reasoning on top of a chart, and I made an investment decision from there. So if you guys found this video interesting, feel free to like and subscribe. I plan on making a lot more cryptocurrency videos in the future, along with some other investment-based videos. I'm also working on a series where I track the performance of a stocks and bonds growth portfolio. And alright, thanks for watching. Have a nice day, everyone.